Hi traders, and welcome to my video on the Choppiness Index indicator. In this video I'm going to show you how you can use this indicator to catch moves like this for over 300 pips and moves like this for over 250 pips. So you can see I have attached the Choppiness Index indicator to my chart here. Below the chart, this is the MT4 trading platform that I'm using. This is an Australian dollar and US dollar 1 hour chart. You can use any trading instrument, Forex, stocks, cryptos, indices, commodities, whatever you prefer, and any time frame. I'm personally going for the 1 hour charts. I like the 1 hour, 4 hour, daily and monthly and weekly charts simply because they contain more price data and therefore I find these signals to be more reliable. It also means less time chart watching, which is great. So back to the Choppiness Index indicator. Here it is here. Basically what this indicator will show you or attempt to show you is whether we are in a range, consolidating or choppy market. So it's called the Choppiness Index, but basically is referring to a range in markets, or if we are in a trending market. Okay, so here's the indicator here. Basically anything high suggests that the market is choppy or ranging. Anything low suggests that the market is trending. It's as simple as that. Okay, you can use it to identify market ranges if you're range trading, or you can use it to identify trend in markets if you're trend trading. I prefer trend trading simply because I can catch bigger moves with less effort. However, you can use the Choppiness Index for range trading. Also, I've marked on the indicator here levels 40 and 60. The indicator doesn't actually include these levels. I've just added them from the indicator settings myself. The reason being is because it just makes it visually easier for me to determine high levels of choppiness. As you can see here, the 60 level, anything in and or around the 60 level, the market is choppy. As you can see there, just mark that if it's not obvious. This is a choppy market. You can see the Choppiness Index is in or around the 60 level. Generally anything high suggests a choppy market. Okay, and if we just remove those and look for a trending market there, if you look at the Choppiness Index, it's generally low around the in or around the 40 level, suggesting a trending market. Okay, so as simple as that really, the Choppiness Index. I wouldn't use it for entry signals. It's not going to tell me when to enter, it's not going to tell me when to exit, but it can be a good way to gauge sort of the momentum of the market, whether we're trending or ranging. That being said, I don't think it's doing much more that you couldn't do with your eyes, to be honest. I mean, we can just look at this and we can see that it's ranging. Same with this scenario here. I mean, once we're in and around here, we can clearly see, okay, we're in a range. The indicator just confirms that for us. If you like to use indicators, you just find them visually easier to understand, let's say, then I can understand how it would be beneficial in that instance. And also, to be fair, you can see here that it suggested a choppy market as it came up to my 60 level here. And, you know, it might have taken a few more bars to realize that if you were just trading based on the price action alone. Yeah, so really it's good for filtering trending and ranging markets. That's great, but how do we enter? There's literally thousands and thousands of different ways you can enter. I've done loads of videos on candlestick patterns, price action analysis, technical indicators, various different ways you can time your entry. So if we just say we've spotted this trend here, we can see prices moving away from the support level. Okay, resistance is here. Sort of have almost a 1, 2, 3, almost a triple bottom candlestick pattern. This breakout is just a bit further, but we do have this candlestick pattern here. I believe that is a hammer candlestick pattern. The market is moving backwards, back up. And we can see the Choppiness Index here is falling. So that suggests to us the market is coming out of this range. Okay. It's coming out of this range. The market is moving up. There is a significant level of resistance. We can trade the breakout of that resistance. Or we can wait for price to break out and have a pullback as it does here. and then enter on that breakout if we just want to confirm that this line of resistance is broken. It is broken. It holds up as support nicely, and then you can just trade after the pullback on the breakout there. You can see the choppiness index is not saying that we're in a ranging market. I mean, it probably started to creep up after this price action here. However, it swiftly fell down with this breakout we had around here, so that could have been a nice entry onto this particular trend. Let's see what that was good for. I mean, you're getting in early, 250 pips. I mean, there's no real need. It would be great to get in on this initial breakout. However, there'll be times when you'll see the price, it will be a fake out. It will just fall back down, range a bit more. So there's no harm in just waiting for an established breakout. Then it's just clear, okay, now we're in an uptrend. Let's look to buy on the breakout and just use the choppiness index as a gauge for perhaps we wouldn't want to buy, let's say, when the price is too low down here on the choppiness index. That's just because the trend can be exhausted. Okay, so if you see it's all the way down here, you don't really want to buy at the top. It's all the way down here, you don't really want to buy at the top. So as I said, it's good for filtering trades that way. When it's all the way down here, you don't really want to buy because you're late to the trend. On the contrary, you may want to buy ironically when it is ranging, simply because that can indicate a strong pullback. Okay, so when the choppiness index does get higher, it can be a signal of a pullback. You can see a pullback by just looking at your charts. I mean, I can look at a chart there, and we know clearly that's a pullback. I have a level of support formed there. I have some bearish candlestick patterns here, but then followed by some bullish candlestick patterns here to the upside. This level of resistance has come support here. Price is stuck on the trend line. So all good signals that we're going to expect to break out. And as you can see from that big candle there, that's exactly what price done. So that could have been a good entry. This resistance level had been tested multiple times. So again, a potentially good entry point there. Choppiness index was headed down, which is a good sign because it suggests that, okay, we're coming away from this consolidation here. And we're going to go into a trend. It's quite confusing in a way because a lot of indicators, this line is usually higher if there's a trend. So we actually want it to be lower for a trend, which is probably why a lot of traders who are trading ranges might want to use this indicator, just because there are plenty of indicators already included in the MT4 or other charting platforms which will tell you the momentum of a trend, such as the MACD indicator, for example, and the ADX indicator. They both tell you trend direction and momentum. There's a choppiness index. I mean, it's in the name, choppiness, ranging index, if you like. It can be great for that. But that being said, it can also be a good way to filter out, like to stopping us to buy at the top or sell at the low. Not that you're going to do that anyway, because as I said, when the price is too extreme down here, we might not want to get into a trend because it can be too late. Instead, when price comes up to here and price might be ranging, it could be a good time to get into a trend. Sorry, oh look, we're getting into a range here, so that would have been another ideal entry into this trend here. I did skip this one, but price is in and around here. It wouldn't have been the most perfect entry, but still with a reasonable stop loss, you would have been able to get in and catch a nice move there. Again, choppiness index, we want it to go high to show that, okay, the market is choppy, we're having a pullback. That's exactly what it does there. And then wait. Here we would be marking probably want to wait for the resistance breakout there. Though in saying that, this is quite a choppy market in general. We probably want to mark our resistance around here and just wait for a confirmed breakout again. Okay, you can see as the market moves up there, that trend there, the choppiness index falls. indicating a trending market. Okay, it can be slightly lagging. I mean, you know, we could have had a potential trading opportunity here off this level of support, pullback, big bullish candle there. It could have maybe looked into this breakout or just the reversal off of here. And if you look at the Choppiness Index is still saying it's not telling us the direction of the trend. It is showing that there is a trend. However, the trend here is downwards, whereas we're looking at the overall picture, we're trading this trend in an upwards direction. Okay, granted, if you're day trading, you might be trading this day short, which is fine. I just like to look at the overall picture and trade in the direction of the overall trend. As we get up around here, you can see some consolidation. The indicator is making highs, suggesting that we're back in a range-in market or choppy market, if you like. So we're going to wait for the next breakout. Moving along here. Strong resistance. We have a triple top candlestick pattern or M formation. So in this instance, we're going to look for price to break below the support. Okay, and to make lower highs, suggesting a downtrend, which it does. Lower high, lower high. So we're going to look to go short. As I said, Choppiness Index can be good for finding the pullback. You can see here. So this is when it tells us, okay, we're going into a range. We look at our chart and we see this is the range here. Okay, so we just mark it. So this is our range here. Choppiness Index is high. We're in a choppy market. Chop, chop there. As it falls down, some bearish divergence suggests that we're going, the downtrend is going to continue, and we could possibly enter on the breakout of the choppy zone, if you like. There, in fact, this is a strong level of support. Forming a wedge pattern here, we've got bearish candlestick patterns there. Got a 3 inside down candlestick pattern there. Again, bullish candle, bearish candle, half the bullish bar. Third candle of the 3 inside down breaks below the initial candle, so that's a possible short confirmation. Got falling star there, or shooting star. Yeah, so lots of signs that the market's bearish. I mean, a trend line tells you all you need to know anyway. Choppiness Index starts falling. We're coming away from the range. You can time your entry there. And that would have been a fantastic trade on the breakout for over 200 pips profit potential. Good thing about this one is as price started falling, could have locked our initial stop loss. I would have put just above this area, this high here, so around 10-15 pips, which is really tight for the 1 hour chart time frame. And as price fell down to around this level, could have moved a stop loss there, locked in the trade with some nice profit. Falls again, locked in, move stop loss here, lock in the trade. As it falls again, move stop loss here, and just lock in the profit on the way down. Yeah, and even exiting some of the position if you want, bank some to bank some pips. Yeah, and there's plenty of potential in this move. What I wouldn't want to do is, you know, have a 15 pip stop loss and say, okay, I've got a 3-to-1 risk to reward ratio. As soon as the trade moves 45 pips, I'm out. You know, you're going to exit prematurely early. It doesn't matter. You're going to still, you can still, it does matter actually, but you can still re-enter, but it does matter in the sense you're just going to get in a worse position than you were originally. You're going to pay brokers, spreads, commissions, maybe get slipped out, especially on a big bar like this. That is actually NFP, non-farms payroll Friday bar, I believe. So not ideal. However, there is a nice level of support there. That bar broke out nicely. That would have been a good trade. Trending down. I mean, you don't need the Choppiness Index to tell you that's a good trade, do you? No, you don't. You can see market is trending down. Nice bit of support. Bearish candlestick patterns. It's an entry all day long. Okay, and a good one at that. I just noticed this level of support that we were looking at here actually coincided nicely with support from all the way back here, so we can, it just emphasizes the strength of that that level there. So as a good entry. So Choppiness Index, to be fair, could have picked up this entry in a way where we see that it's gone high, which means that we're in the choppy zone, if you like, i.e. a pullback on the overall trend, which we know is a short trend at the moment. So as the price comes up around there, we can then mark our support level and look to trade on a breakout. If you're ambitious, you can try and sell up here somewhere off of that level of resistance. I mean, candlestick patterns, perhaps stochastic oscillator or something can help you time your entry there, but waiting for the breakout and get you in a favorable position. There's still plenty of gas left in the tank. Again, Choppiness Index comes above the high level here, suggesting that we're back in a choppy market, which we are if you look at the chart. Don't necessarily need the indicator to tell you that again. And then we could have traded the breakout there. Pullback happens here. That support level holds up as resistance, so we know it was a good level. And again, a nice move to the downside. 130 odd pips. Thank you, Choppiness Index. And of course, excellent price action analysis, candlestick patterns, support and resistance. And most importantly, sensible money management. Okay, we're avoiding trading, remember here, because we're going to be late to the party. Have a pullback here. We look at the price and we say, okay, I mean, we even though there's a pullback there, you can look at that and be like, I'm going to be selling low probably here, or maybe. And then you have this mess. You might genuinely be late to the party there. Okay. And then you might just want to wait for this next breakout to the downside. So we'll come in here. So this held up nicely, this resistance. Pull back on the Choppiness Index. We can see that this is a downtrend now. There's a pullback entry there. Okay, I'll just mark these off here. Okay, so downtrend. Pullback Choppiness Index, i.e. it's a choppy market, so enter on the pullback. And as well, around this area here could have been favorable entries into the trend, although as I said, looking at the overall picture, where perhaps exhausted, you would have preferred to have got in around here. And with so many different trading instruments you can watch and trade on, you might just want to look for opportunity elsewhere. Yeah, because otherwise you can see starting to price to get too low here. Okay, well, hopefully that's given you a good indication of how you can use the Choppiness Index indicator in your trading. Just complement it with support, resistance, price action analysis, candlestick patterns, and good money management. Thanks for watching. Please like and subscribe for more. Catch you on the next one.